you as a private investor have the right education to be able to ask the right questions of these operators? If you're going to invest in these syndications or invest in real estate at all, that you really educate yourself from other people that have done it, other people that do due diligence on deals, that you know what questions to ask and what to look for. A lot of operators, they don't necessarily put all the risk mitigation things in there. They want to make the numbers look good. It's important to understand those things, right?
I am Christina Suter, and this is the Real Estate Breakthrough Show, where we talk about the reality of real estate, the mindset you need in order to face the reality of what it is, and tips and tricks to get you moving forward in investing. I am your host, Christina Suter. Hey you, this is Christina Suter on Real Estate Breakthrough, and I have Matthew Owens with me with OCG Properties, and we were just in the middle of a conversation. I said, hey, can I turn on the recorder? Because he was telling me about giving me an update about a project he's got going and the importance of financial control over a project that you've got from a distance. So let's just pick it up from where we were talking about. You were saying, yeah, you're taking over this project. It wasn't working. It was failing. You're now stepping in order for you to actually get managing control over it. You found somebody that it sounds like he's a perfect fit for being able to manage this. And then you said, and it's so important to have financial cross-check. Take it from there.
Yeah, after flipping as many houses as we have and as much real estate deals as we have from afar, from living in a different market than we invest in, you realize how important that financial control is in being able to protect yourself in every way possible, right? So that's controlling the expenses, holding people accountable for work, and making sure that payments are coming correctly based on an incentive for performance with all of your different relationships, reviewing the higher level financial accounting aspect of it to say, what ways can we reduce costs? What ways are we being inefficient? And how do I make sure that, one team member that potentially leaves or one comes on that, has more responsibility doesn't, snowball the whole operation and have too much control, right? And be able to do everything that they want to do versus necessarily what you want, especially on new relationships, setting those expectations up front about proper procedure, proper reporting back to you, and what things you need to see to be able to hold them accountable correctly, both legally, ethically, and financially, is all extremely important to put in place, right? Because otherwise the whole thing fails without that, right?
And literally fails. So let's get gritty with this in a minute. So let's talk about how do you set up those systems? Yes, there's a financial accounting that's going on so that you can review it. Okay, that's great. Now give me on Monday I do this, or give me on end of the month I do this. So because I can't tell you how many times as a real estate investment advisor, I have stepped in and had to work on a project that wasn't working because the accountability wasn't there. And I can look not just to the person, the employees, but to the owner and how did you hold them accountable? So let's talk about what that means, nitty gritty.
Yeah. And I think it's really a great topic that you're talking about, because at the end of the day, it falls on the owner. And quite frankly, 90% plus of business owners don't have that skill set or that understanding, and they have to learn it or bring the right people in. And they may not know who the right people are if they don't have the experience in that area on the financial side to know if that person is good or not. You can imagine how many bookkeepers that we went through in the beginning that said that, oh yeah, they're amazing bookkeepers and they destroy your entire books and don't understand the actual underlying transactions that are occurring, right? So you can't really get a good picture of your financial life without proper record keeping to start, right? And so I think this could be very overwhelming for a lot of people. And so doing the right structures of the checklist that you should be going through on a weekly basis, on a daily basis, on a monthly, quarterly, and annual basis can be key to putting it in perspective. So it's not so crazy overwhelming where you're like, yeah, you need to check all your numbers and all checks and balances across the board. And, all of a sudden people that don't understand money or finance in that level are like, like I can't do this. So
get it away from me, get it away from me.
Right. And it's just, and I notice this when I'm doing people's taxes, or where I previously was doing that, or I'm helping people with their financial life, you see the glaze go over their eyes where they're like, you lost them, and so you're like, wait, bring it back.
Yeah.
Like, let's
Yes.
break this down. Look, do these 5 things each day, do these 5 things each week.
That's right.
And a lot of that is, uh, when you're breaking this down, what are the controls that you need to put in place to know what money is going out, what money is coming in, and that you can get clarity as to the profitability, cash reserves, and the operational function of this, and what checks and balances can you put in place with your business if you're talking about a, you know property management company or a flip company, or any other real estate related type company. You're typically saying, okay, well, how much budget versus actual am I on my renovation, right? How much interest hold do I have left and remaining? Am I going to go over budget there that I need to have reserves for?
Mhm.
What expenses am I paying every single month to employees, to managers, to team members, to utility bills on properties, to across the board, everything that's coming in the door from an expense standpoint? Can you catalog it and make sure you understand, is that a right expense? And, is that bleeding you? So you know what areas that you need to fix that are bleeding you on a consistent basis that don't have income covering that item, right?
Mhm.
So just understanding that from a cash flow perspective and a basic expenses coming in the door perspective is really important from a review standpoint. If you're a business owner that has got a million things going, don't rely on yourself to do it. You need to bring a team member in that's going to do that for you, because you're going to suck at it compared to someone else that's just looking at it every single day. I had to learn this being a CPA. I'm
Right.
really good at
Right.
it and I still shouldn't be
Right.
doing it.
Right.
So
Well, and it's just, and you said it really well, when it depends upon the project that you're involved in, right?
right.
So the way that I like, from a systems point of view, you have a really good bookkeeper or a really good as a CFO. Great. Wonderful. CFO is making sure it's all being done. But then what I find from a strategic point of view is I actually need to meet with that person, and I need
Hmm.
to set up a meeting either every week. Either sometimes it depends upon what you're dealing with, every morning, every week, every month, right?
Hmm.
Now, when you're dealing with 20 flip projects out of state, like one of my clients was dealing with, that should have been a phone call every morning, because they're
Yeah.
dealing with 20 properties,
Yeah.
right? So that's why every morning, it's not so much that every property is moving that fast. It's just there's 5 properties that need this today, and then the next 5 properties the next day, right?
Right.
That's a physical, like, we got to do that meeting. If we're doing a flip, when I'm doing my flips, I need a phone call every week with my, or review phone call every week. And the reason why I set it up as a physical appointment is because I don't know about anybody else, but I'm good at getting my homework done when I actually have to turn my homework in. I'm not so good at getting my homework done when I actually don't have to turn it in. Right? So
Holding
it's like,
yourself accountable is awesome.
right.
Yeah,
So
for
I
sure.
use the phone call with them where I'm, quote, holding them accountable, as me holding myself accountable, because I need to be prepared for the phone call in order to not look too much like an idiot in the process of doing the phone call, right? I need
Right.
to be prepared and go, okay, well, this is our 20 properties. This is what I needed for these 5, or this, whatever is our topic for this coming week. I need to have those topics finished and my homework done so that I have my phone call on Friday at 9. So whatever that is, but strategically, that I think is the missing link. Not only is it hard to find a good bookkeeper, you know this really, really
Very
well.
hard.
Very
Yeah.
hard. Very hard. I've got a
You
client
have to
that,
have that review process person in place, that CFO that really knows bookkeeping and accounting, that you're probably going to pay a lot of money to, that is going to teach you how your books are supposed to look. They should be giving you the right reporting and telling you what you should be wanting to see. And
Mhm.
if they're not teaching you, then you need a higher level person that's going to do that, right?
Yeah.
So as much as, yeah, you might give insight, but someone has to review those books to make sure that knows what they're doing, that making sure those books are right in the first place,
Yeah,
for sure.
definitely. All right. So Matthew, bottom line, your history as to why this is such an important topic for you. Why would you and I start with this topic?
Because I'm having the exact problems right now across, multiple projects, or I've had in the past as
Yeah.
well.
Yeah.
One of the projects I have right now, it's if people are left to their devices, spending will increase automatically, and that's exactly what occurred. And
Mhm.
I was too busy, and now I'm focused on this, massively more. And it's interesting when you see, you think people have right expertise to do certain things, and that's not necessarily the case. So it's extremely important to make sure that you are checking in with different people consistently to make sure you think and that they have the right skill sets, or we're on the right track, or you're able to bring in the right people that can help fill those different gaps across the board. And I learned this for years doing business out of state in these ways where I didn't have those controls in place with my real estate business side of things, and I took hits, because I didn't have those things dialed in. I didn't know, oh my gosh, this project's going to go 3 months over on interest, and I didn't have reserves set aside for it, for that extra 3 months. And so being able to make sure that you have buckets for projects with extra reserves set aside, for example, and you have your operating expenses. We have 12 months of operating expenses, 12 months of living expenses for you personally and the partners as well, so that way you separate these buckets of capital
Yeah.
for your projects, because you don't want to go spend like crazy on your business and then you can't live over here. This is what a lot of business owners do all the time, right? So it's key to be able to make sure you have proper reserves set up for these big expenses, and you have a plan there, and you're allocating every month, reviewing what expenses went out, what income came in, what expenses can we cut out, what ways can we increase income by focusing on key income attributes, and looking at that every single month, and potentially, depending on project size, every week,
Yeah.
to know exactly what's going to happen, right? So that
We
is
just
the
had
key.
our ITI, Investors to Investors class, Real Estate 101. And I
Yeah,
spent I had this whole slide that's all about having, you're spending over here, you're saving over here, are you not, and having a line between your business and your personal, and you have individual savings accounts for each ones. And I mean, some of the guys' eyes are rolling back like, really, Christina, come on. I'm like, yeah, like
yeah.
really,
You're
sincerely.
like, you got to draw a chart for all of this so that they can see I got bank accounts for here
That's
for
right.
these things. And
That's right.
yeah, it's like, yeah, the visuals help when
Yes.
there's
So
math
somebody raised
involved
their
in
hand and
these situations.
went, on this net worth form, why do you have multiple lines for checking accounts? I'm like, well,
More than
I
one.
have three checking accounts just for me personally. Actually, no, that's not true. I have four because I have one at another bank. So I have four checking accounts just for me personally, not to mention all my businesses, all my
Right,
projects having their own accounts. And it's that line between knowing that your real estate business is not going to destroy your personal financial life, and
right,
that your personal financial life isn't going to destabilize your real estate business. And so
right,
they're each in their own buckets, they're each in their own accounts, and they each have their own OSHIT reserves for taking care of those moments.
right.
So,
I think that's key, and those big moments will always come. So it's a matter of replenishing and stabilizing. Not taking on too much risk at the same time, and making sure that you have proper reserves set aside for these things consistently. It's like if you're living paycheck to paycheck in your business, then it's going to be hard, and you're going to live paycheck to paycheck personally as well.
yeah.
So you don't put these buckets in place, you're in a big challenge. I can appreciate the bank account thing. I call my brother the money Nazi, but it's amazing that he checks like 50 plus bank accounts every single day to make sure everything is lined up and controlling the money, really, really tight, because it's amazing to have someone like that on your team that is a little ADHD like that, so
Yeah. Yeah. No. Should he have been the CPA instead of you? I mean, I'm just
probably,
saying.
I have a totally different personality for this. I'm like a shoot first and figure it out. We'll make money. And my brother's like, hold on, don't be an idiot. Like let's wait, so
Oh, that's so good. It's so good he's there. That's fantastic.
yeah.
So okay, give us the 30-second elevator speech. Matthew Owens does what? Because not everybody knows. I know what you do, but not everybody does.
So first and foremost, I'm a father. I have a daughter that's 5 and a son that is 8, coaching basketball and things like that. I've been married for a little over 10 years. I was with her for 20. I had her convinced for 10 years it was bad for taxes to get married. So, of course, that was, and I don't want the government involved in my contracts. So that was my
Hmm.
excuses right there.
Okay.
So, and aside from that, I flipped now over 1,000 houses now. We have over 35 million lent out to flippers in different markets around the country. I've raised a little bit over $150 million for real estate transactions over that period of time. And I quit my CPA firm job in '06 to go into real estate. So I was a real estate genius for about a year and a half before I realized I was not a genius at all. And I was just the market timing, So, and that's when I became a true economics buff at that time, of course, and learned economics. So even though I got a degree in economics, so it's pretty funny. So, but yeah, you learn the hard way if
Learn
you're
the
going to
hard
learn.
way.
So, but yeah, that's the story. And now I primarily just focus on helping investors create cash flow streams in a diversified portfolio. I invest in promissory notes, single family homes, multifamilies, mobile home parks, multiple debt structures, and it's a lot more fun than doing accounting and audit work as a CPA. So
And right now I'm getting 2 loans through your company.
yeah, yeah, that's awesome.
Right?
That's
Working
awesome.
with Todd. So, okay.
Yeah.
So tell us just for a moment in your history, why you chose to use real estate to break through to your financial freedom instead of a CPA? I mean, CPAs isn't a slouch.
I was in a lot of pain working at a CPA firm. It was against my personality. After you learn the ropes and you know how cookie cutter audits can be, and tax returns are kind of monotonous, and you're just, it's not fun. I mean, now it's fun learning tax law because I don't want to pay taxes. But
Right.
previous to that, I'm like, I didn't care that much. So and really, I was just bored out of my mind, going, I got to do something different, but I didn't know how to make other money, right? I was like, I'm still, go get a job, go to college, get a job, work your way up type situation. Even though I started out at like $32,000 a year at a CPA firm, it's just like, you don't make as much as you think. That was a while ago, So, but that was like year 2000 when I started. And so, I was bored and I'm like, should I open a bar? And my stepbrother came to me and he's like, hey, I got these classes, real estate classes. You got to come to me. And I'm like, how much did you pay? And he's like, oh, 16 grand. I'm like, oh, you got jacked. You just totally got stolen from. And I was going to blow him off. He's like, no, you got to go. You got to go. And so finally I ended up going, and I immediately was drawn to real estate. And I was like, and I just read Rich Dad, Poor Dad, which
Right.
made me think, make a money in a different way, build wealth through building assets. And I'm thinking building businesses. I wasn't thinking building real estate necessarily at the time. And then that really I just immediately knew I was drawn to it, and I was drawn to the math, and I was like, there's a way to take control of my financial future. And if I had to, I can go back to a CPA firm. I didn't have kids at the time, so it was a little less risk,
Yeah.
on
Yeah.
that side. And so that's when I just said, forget it. I got my first deal under contract that I was going to make like 30 grand on. I didn't end up making 20 because I did the math all wrong, of course. Luckily, it still made 20,
You made
so
20. Luckily, you still
um,
made 20.
yeah. And
I
then
think
I just
everybody
quit.
fails or
So
loses money on one of their first 3 or 4 deals. That's
yeah,
okay.
the very first property I ever bought, it was negative $500 a month in cash flow, because I'm like, great, I only got to spend 500. I get to own this property. That's great, and it's the worst
Was
decision.
was it
But
in LA?
no, it was in Cheney, Washington. Of course, it was like a
Okay.
new build, and
Oh,
they got me at the top of the market, and
yeah.
I was like,
That's
great.
right.
So
That's right. You said 2006. It was the top of the market. All right.
yeah,
So,
that was my
what in
first
your
one.
history prepared you or helped you to be a success today? Is it the CPA? Is it the chatty personality? What is it that you think really, like, of your natural skills and talents, what is it that helps you in real estate today?
So, definitely being able to talk to people is a massive plus, and having, being able to be personable and have a good conversation and just be real with people and not be afraid that, they're going to judge you and all that kind of stuff, and just, be a normal person, like that, being able to have that conversation with people is very key. And you learn that over a period of time. I remember my very first real estate club sitting there going, don't talk to me. I don't know anything right now, and like just
Right.
trying to
Right.
learn
Yep.
myself.
Yep.
Right.
Yep.
So, and that is key, the networking aspect. I was going to 4 to 5 networking events every single week in the beginning for 2 to 3 plus years,
Hmm.
every single month, going to these events, getting out there and developing relationships and finding deals that way. Getting out there is absolutely key. But I'd have to say the number one attribute, the thing that I think I attribute the most success, is getting punched in the face and losing everything and standing back up and doing it again
Yeah.
and saying, screw it, I'm just gonna do it. Like I
Right.
can't, I have no choice, right? And being able to do that and making you strong, you're going to get punched again. And so how does it feel? Like, learn how it feels now. And, you're going to be way stronger moving forward and be able to stand back up and take those punches over and over again, because that's what it's going to take to be successful.
It
So,
really does. It really does. And I can't tell you, like, I mean, I was it 2 years ago, 3 years ago, Zillow ended up losing because they'd put out they were starting to buy properties that
right.
thought they were buying at a discount because of their whole Zillow rating. And then
Yeah.
they end up going, wait a minute, our formula was wrong. Right. So your
Yeah.
formula was wrong on $500 a month. Okay. Zillow's formula was wrong. They lost $320 million
Oh,
on their
wow.
wrong formula. If that helps
Oh,
any, make you feel a little better about
just,
your $500 a month problem, right?
yeah, yeah,
It it
definitely.
it it just those stories help me and remind me when I'm up against my own, like, oh crap, I missed it on that flip. I fricked it up. And now I'm
Yeah.
going to pay my investors off in whole out of not just my wins on that property, but my
Right.
own personal reserves so
Right.
that I
Right.
make my investors whole. So I keep my brand intact in the industry and I can do
Right.
another one, right? So I
Right.
can play
Yeah, 'cause you
another
you can
day.
make more money if you just keep pushing through, and you learn that lesson, and now you're 10 times stronger. You know what to do the next time. Hopefully you learned, and
Hopefully you
and
learn.
and yeah,
Yeah.
and realize too, like, it really helps you a lot when something really bad happens. Like a year and a half ago, 2 years ago, we got stolen from by 450 to 500,000 from a contractor on, actual straight up fraud, taking fake pictures, giving fake invoices, stuff like that. And I was shocked how, like, it hit me a little bit at first, but then, like, in a day, I was able to just, like, emotionally wipe it off my shoulder and say, how do I make this money back? And, like, some crazy new opportunities came up because I was awake to them and aware of it,
Mhm.
that are going to make me way more than that, like, back in the next year. And so, like, you look at those things, and if you keep your head up, you're able to look for those opportunities and make that money back. And it's a hard thing sometimes. And you got to take that hit and be like, damn it, do I got to really take another hit like this? So, but,
Really?
you got
Really?
to
Flip
deal
it a
with it.
couple.
Yeah.
Do I need to? No,
Yeah.
and
Can
I
you take
love
a
you
break?
describing that because it means your systems were in place. You said the
Right.
guy had to outright lie to you
Right.
in order for him to do what he was doing. It wasn't
Right.
just we weren't paying attention, we weren't holding our accountability in place. We
Mhm.
were, and the dude was outright lying.
Yeah, and it's crazy. Like, there was fake pictures of product finish. He drywalled things and gave fake permits. There was, like, yeah, it was madness. But if someone wants to steal from you, they're going to be able to, and realize that that's a real thing. People steal all the time. It's crazy, especially when you're
Mm.
dealing with vendors and contractors
Yep.
and, property managers and people that aren't making a ton of money. Even the people that make a ton of money will steal from you. So, as a business owner, you got to take these swings, and you got to swallow your pride, because if you have a lawsuit against people, it's never worth it. Even if you win, it's not worth it. So, like, you just have to put the right checks and balances and mitigate
Yep.
that through the right financial protections we were talking about earlier, where it's like you are able to mitigate those risks by having proper procedure in place and dialing one little thing in that was off that cost you money,
Yep.
right? So,
There is a humbleness that is required in this field if you're going to survive it longer than one cycle. I'm just
yeah.
saying.
Yeah.
If you're going to be in this field longer than one cycle, you will either leave the field or you will get humble. But
Right. Absolutely.
it's just the way it has to go. Okay, so OCG Properties, you guys have been incredibly successful. You already mentioned in your history over 1,000 flips. You're doing loans. You've brought in $150 million in capital raising, I think was the number you said.
Yeah.
What is the secret sauce of your company? Is it
So
yeah,
so I think, looking at people's needs in different ways, right? We
yeah,
try to help people with their specific strategy. Like, we bring in 1031 exchange investors and help tee up replacement properties for them that are turnkey and fully renovated and have management set up and they're ready to go, or joint ventures with those different partners, or pooling investments for investors. Like, we have investors right now that make $150,000 a year on properties, on net income on properties with us that we're managing, and they get quarterly checks, on those
nice.
things, just from helping people. Because you might have someone that's, a little elderly that does not want to manage a bunch of houses or even apartment building. They want another asset manager in place there to help manage those portfolios correctly, right? So, in addition to that, some people, they may not want to own real estate or have a long-term type commitment like that, and even deal with the headaches of owning real estate,
Mhm.
because most real estate is not passive, right? Whether you're holding it long term,
Yeah,
from a rental perspective,
it's
or
not completely
flipping,
passive.
it's, yeah, you're still got to manage
You still
managers
gotta
and
yeah.
things like
You
that that
still
you have to
manage
do,
manage,
right?
do your accounting, make sure your payments come in,
Right.
whatever it is.
So so I like investing in promissory notes too, because it's a lot more passive for those investors too. And now they have an option that, real estate can be volatile and go up and down in cash flow with rents, not getting collected, or repair here and there, or vacancy or turnover cost, especially in the beginning before rents continue to inflate. And then with the pricing the way it is. And then sometimes people just want a consistent cash flow stream. I have someone that has like over $5 million with me that is making a killing with us, and he just gets to travel the world in retirement, and he's invested in a bunch of first trust deed position loans,
There you go.
and it's
Yep.
65% on average loan to value, and he just gets checks, and then we help him roll his funds over, and we give him his new updated documentation every single time, and
Mhm,
record everything for him, so
mhm,
he has collateral and security. And then there's other aspects where people want to invest in different syndication investments. That's one strategy I love, because there's only so much active operations you can do, right?
mhm,
Investing in promissory notes or rentals,
mhm.
and doing that is a lot of work.
You run
So,
out of time, or you're paying a larger and larger team.
right. So I love investing into syndications where I can
Mhm.
say, hey, I'm going to put 25, $50,000, $100,000 into 50 different buckets that are run by other professional operators in different markets, different asset classes, like self-storage, mobile home parks, other debt
Yep,
instruments, multifamily, all the different stuff, even private businesses. And how can I diversify so that if one of these guys blows up on me, or girls blows up on me, I'm not like
yes,
majorly at risk of,
yeah.
like detrimenting my financial situation from a cash flow perspective.
And it
So,
will blow up on you. It's one of the things I have finally come to in
uh-huh.
consulting for the years that I have, is I'm now telling my newer clients, like, "Guys, look, it's gonna blow up on you. Something's not gonna fund. We're gonna do all our
Yeah.
due diligence. We're gonna do our phone calls." I mean, we do 8 to 10 hours minimum of due diligence every time I put a client into something, or I advise a client to get into
Uh-huh.
something. And it's still gonna be like, "Okay, look, something's gonna blow up because
Right.
something moves." And it may be the brother, it might be the cousin or the nephew that was in charge of blah, 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 or it might
Problems
be
come
the
up every day. Yeah.
my problems come up every day, or it might be the market, or it might be interest rates, tripling in a very
Right.
short amount of time, or might be COVID, right? Or
Yeah.
might be or the meltdown we had in '06, '07, and '08, and all the
Right.
banks giving everybody loans. And like, you never really know what the black swan event is. But
Right.
what you do know, at least what I know now, having seen so many of these, is at in every cycle, there is something that fails, at least
Right.
one. And
Right.
I have to deal with that. That's what has failed. Even if I get myself out of everything else, I'm always stuck with one or two,
Right.
right? That is failing, that's in the process of not working. And so it's like, I just like, even though I consider real estate really safe and I consider it better than stocks, I feel like it's a little
Right.
less of a Russian roulette in my mind, right?
Right.
Because stocks
You
are
have
always
some
boom, boom.
control over the asset, you can mitigate risk in a lot of ways. This is like where and this is really important to understand. A lot of the operators out there in syndications, and if you can be included in this too, if you're direct investing in real estate yourself as the operator,
Mm,
in these cases,
yeah.
and even more so in
Yeah,
those
I do.
cases than even other
I direct
operators.
invest, and I'll have a private investor as a loan secured against the property. I don't do a syndication, but I do have
Right.
private investors that are secured as loans. Yeah.
Right. And understanding the experience of those operators is the biggest key, through the whole thing, because what have they done in the past, to be able to show that they've mitigated risk and they've been able to weather the storm on different market changes and things like that, or what are they doing now that they've seen the storm and been through it, as well, because like certain things like we're doing, like in our my lending, I don't use any leverage, like where outside banks come in and leverage the loans to put investors in second position like a lot of these funds
Mhm.
do.
I do.
And that would like massively give investors a haircut if there's a major change.
Yeah.
I'm putting a deal together right now with zero debt because I don't want to deal with debt. I want all equity to weather any cash flow storm that comes up, right? And so, like, how do you go out and what do those operators say about how to mitigate risk? And do you, as a private investor, have the right education to be able to ask the right questions of these operators? It's really important that you, as an investor, if you're going to invest in these syndications or invest in real estate at all, that you really educate yourself and from other people that have done it, other people that do due diligence on deals, that you know what questions to ask and what to look for, because a lot of operators, they don't necessarily put all the risk mitigation things in there. They want to make the numbers look good and things like that. And so
They
it's
do.
important to understand those things, right?
They
So
do. Yeah, no, and they do. They do. Yeah, I've seen it again and again and again where I've seen operators put in numbers, and I'm a little like, you're not going to get me to invest because you're telling me there's an 18% return. You're going to get me to invest when you tell me there's a 14% return or even a 12% return. But
right,
I
but
can
you've
calculate
mitigated all
from
these
my
things.
side that there's more upside beyond the 12.
Right.
If you try to show me all the upside in the numbers, I am not going to believe you, and I'm going to be concerned that
Yeah.
you're not prepared for if there's going to be a problem along the way. So
Right.
that's how I do my due diligence.
Yeah, and it's interesting, like, looking at deals in a different way when the market is the way it is, where it could continue to be steady up, but at some point that black swan is going to come, like you said, and there's going to be a tank or something's going to happen, a liquidity crisis or something, right? And
Yep.
so, how do you mitigate that risk in your investing now? One of the deals that we just did that we closed was a 172 unit apartment or mobile home park that needed 50 new units coming in and 26 renovation units to renovate down units. And so we're ending up at our cost at like a 13.8% cap rate, which is like 60% of the value of the property. So even if we did half of that value add, we're in a great position. And I'm looking at playing defense
Mhm.
versus offense. And yeah, it's a little more risk on the operational front. Can they implement those strategies and get that up and running and accomplished? Who's the team? And have they done that before?
Yeah.
Right. But on the other side of things, how do I make sure that this asset, which I like mobile home parks for recession-based asset
Yep.
mitigation or
Yep.
risk mitigation,
Yep.
how do you invest in the right things and the right structure that you're adding so much value that you have some leeway if everything tanks by 20%, for example, right?
Yeah.
So,
Yeah.
which is rare,
It's
even in
rare, but
2008,
it's possible. We've seen it. We've
yeah,
seen it. You
yeah.
and I have seen it. What do you think is pick your industry you want to talk about? What's something your industry is facing right now? Because you're both in marijuana as well as in hard money lending, as well as you used to be in flipping, but I think you're less in that, right?
Mhm.
So pick what one of the many industries that your company is in and tell me, what is it facing right now that people need to know about? What do they need to be aware of? What do they need to know about?
Yeah, so the marijuana space is one investment out of all my other stuff, and so that's a more of a minor aspect of what I'm really focused on long term.
Hmm.
And right now, I'm focused a lot more on bigger projects, right? Like on multifamily, on mobile home parks, on debt funds, and things like that.
Hmm.
And I think a lot of them are facing the same types of issues, right? Interest rates went through the roof, and now it's very difficult to get things to pencil out on paper, and lenders are faced with a massive amount of refinances or debt coming due in the next few years, and the banks have already taken some distress on their books with the last kind of banking crisis that we've had, and so a lot of those lenders are tightening up even further on their lending standards, and it's getting harder and harder because they see if a ton needs to be refinanced in the next few years, there could be a bloodbath in commercial real estate, and we're already seeing levels of distress. And so if something happens where that crashes further, and we've already seen a price adjustment in a lot of ways, but at the
Yeah.
same time, because it just doesn't pencil for buyers, the sellers had to realize that, of course.
Yes.
And so looking at the price adjustments there that have occurred and the potential risk for even more distress, if rates come down, that's going to help them a ton, right? If
Hmm.
they don't come down and they stay up where they're at, it's going to be a tough situation for a lot of them. There could be a major distress coming that could disrupt all commercial real estate because lending is kind of the cornerstone to all of that.
Yeah.
And it could affect also the residential housing market too, massively, because you're talking about the interest rates and affordability there. And
Hmm.
so, you're seeing very low inventory across the board, but you're also seeing very low affordability and demand as well, right? So it's kind of like, I wouldn't say it's even oversupplied or undersupplied in this market, because demand and supply are seem to be matching up because you have a lack of
Okay.
affordability,
Okay.
right? But it's really interesting.
No, that's great. That's well said. Well said. Because as long as you have, even if we have a small amount of volume, right, which is what we're looking at, and a lot of people are pointing at the lack of supply, which leads to a small amount of volume. We are looking at interest rates being high, and they are suggesting that interest rates are going to stay high past March, right? Because they're
Right.
actually intending to try to get supply and demand more in balance.
Right.
And it does. You described it perfectly. How long does it take for sellers to finally go, oh crap, I can't get that price point?
Right.
I just put an offer in last week, and I think, and he was like, yeah, I'll take it. I mean, it was 30% below his ask. No, wait a
Right.
minute. That's an exaggeration. It was 20% below his ask. Right. And he's like, well, just don't nickel and dime me on the way out. And I'm like, okay, because you've been on the, but it's a perfectly fine property. It's just been on the market for 130 days.
Yeah.
Right.
Yeah.
And now
And
he's finally getting to where he's like, okay, I'll sell.
right. And it's really interesting seeing uh, the issues that the high interest rates are causing in the residential market, because it'll be interesting to see what happens when rates drop, if more inventory comes on, because a lot of people are just saying, no, I'm sitting on a sub 4% interest rate.
Right.
80% of the mortgages are sub 4. And so, if you have that issue, why would you move unless you are in distress, right?
Right.
And so you would probably rent your property out before you would go through and sell it, unless you just have a massive amount of equity that you're going to have a really low loan somewhere else, and it's not going to matter with that rate change
Mm-hmm.
on in that scenario. And so I think we'll see what happens, but I think lowering rates may add inventory also, because people will say, hey, it's not that much of a jump anymore for me to go from this rate to this
That
one
rate.
on this
Right.
mortgage over here,
It might
right?
release that 74% where their loans are below 4%.
Right.
So, but what are you seeing in the multifamily? Because like you hit it really well. Single family is a little stuck, but
Right.
multifamily, because their rates are more variable, what do you think we're going to be seeing there?
So I think it depends. I think it's pretty stable right now as far as the rates go. In the multifamily, I haven't gotten a price quote in a little while, other
Okay.
than I
Okay.
think we were looking at like in the sixes for like Fannie Freddie, from when I was just speaking with somebody earlier, like low sixes type scenario, and you could potentially buy down, right?
Okay. Yeah.
On a situation like that. But Fannie Freddie is still giving, 7, 10 year balloons, 30-year AM. There's even interest only program type stuff out there as well. I think, anybody that's looking to buy right now really needs to price in an additional 20% rent drop on these properties to protect themselves in the long term, and just get lower leverage ratios. I would be looking for higher value add type plays to
Hmm.
increase the rents, so that way you can lower your leverage ratios and keep that in line. Because if rents do drop massively or something, because the economy starts going down, there's more job layoffs. I don't know if you remember the job report that just came out or saw it, but it was mostly part-time jobs that continued. The real full-time jobs went down, and they,
Right.
of course, they touted everything went up. But you're like,
And
actually, if you look
it's
at
important that you broke that down because that is information people need to understand, right?
right. And it's interesting because, like, if you look at a chart of part-time jobs, it crashed during COVID in 2020, and now it's just coming back up to historical standards or averages. It's not necessarily gaining above normal
Mhm.
comparatively if you look at the chart far enough out, right? If you could look at it from 2020, it's going to be like, oh wow, look at all these jobs grow, because it went down to zero. Nobody
Yeah,
was driving for
exactly.
Uber, so
If you
right.
look at 2020, you're right, that everything's gonna look good, but
Right, right. So that's, one thing that I'm seeing. And then I think all of this affordability and job loss could massively affect commercial real estate and multifamily specifically as well. And I think the single family market and the multifamily market are very intertwined together with regard to, the affordability, right? If people
Mhm.
can afford to buy more, then they'll move out of, multifamily and stuff like that as well, right? It's like, hey, but if they can't buy, they're going to be pushed into being renters
Yeah,
as well. So
yes.
interesting. Yeah,
Let's
everybody
come
has to live
together.
somewhere,
Yeah, everybody's gotta
so
live somewhere. Right,
right.
so just give me, like, in a 2-minute story, tell me about a deal that went right and how you set up for success.
Okay, so how it went right.
How it went
So
right. Yes, I know. Then I will ask how a deal went wrong and how you saved its ass. But right now I'm going to ask you how a deal went right and how you set it up for success, because I think that's just as important. I mean, we've been hammering on that deals go wrong every cycle. We see deals that are failing in every
right.
cycle. And that is, but also how it goes right in a cycle. There some of those deals are going right through this cycle.
Yeah, absolutely. And there's you can make a ton of money in a more stable market that's going up, and consistently, stuck like it is right now. You can make a lot of money doing that because there's less volatility. If you get the right discounts, you're going to be able to kill it, right?
Mhm.
And we do a ton of these single families that we've been doing for years, and we probably have like a 90% plus success ratio, and maybe,
Mhm.
5% of those are break even of the rest, and 5% are potential losses or issues that come up, right?
Yeah.
Where you just, maybe it's not a big loss, but something small, right? We actually took, a little while ago, we took a multifamily down to the studs, like all the way down the studs. It was a 19-unit building. We bought it for $149,000
Right.
for a 19-unit building that was just in shambles with water damage and all kinds of stuff wrong with it, right? Where we had to redo a bunch of framing and everything else with it. But we ended up being in this thing for $900,000, and we ended up selling it for over $2 million about a year and a half later once it was stabilized, and we're able to get
Oh my
all of the
God.
utilities, put on tenants while we renovated it. So we're
Yeah.
looking at this from an efficiency
Right.
standpoint on the building, because you could pretty much make it any way you want. Now that was a heavy lift,
It's a
right?
heavy
Doing
lift.
that kind of rehab,
That is.
but when you can also mitigate a lot of risk, and work out a lot of problems that you screw up on, if as long as you have enough margin in one of those heavy lifts. So
Yeah.
that's why I like mitigating
That's
risk by doing a heavier lift.
that's an awesome story. No, that's a really great story because you got it at 140 and your
Yeah,
ARV was above 2,000,000.
right.
And people are like, "Well, how do you get something for 140 when the ARV is above 2,000,000?" It's because the lift is so heavy,
Right. It's
right?
like nobody wants to take on a project like that, but if you have the right team and the right rehab crew, that's the kind of thing that can occur, right? And
Yeah.
you can do it in phases also and mitigate that risk financially as well. I remember our contractor on that particular deal, he came to me asking me if what it would take to get bonded and get audited financials so he can get bonded for a big commercial project. And I said, "Oh, well, you need to have your financials in order. You have to take it to a CPA firm to have them do audited financials for you or something along those lines." I was like, "Well, where are you at right now with your books?" He's like, "Oh, if I got money in the bank, then I'm doing okay." And I'm like, "Oh, hold, full
Uh-oh,
stop."
uh-oh, uh-oh.
I'm like, "We are
Red light,
paying
red
your
light.
subs. Yeah, we're paying your subs directly now. You're not touching any money. You'll get your GC fee, and we'll pay for the materials directly." Well, and you're like, "Oh no, my heart just stopped. What'd you just say to me?" So, but we were able to
Oh,
mitigate that risk, and
yeah.
and
Good for you.
and cover it, right? So luckily,
For you.
but yeah, that
Yeah,
was
so there you go. So that is the deal that went right, and that's how you set up for success is one, you bought it really well, and two, as soon as you figured out that your contractor, although might be good at construction, wasn't good at financial management, you went, "Okay, look, we're gonna take care of the financial management piece, we'll let you do the construction piece."
and
Right?
and that and
Like,
that and that goes for 99% of
it does.
contractors,
It
so,
does. It
they're out
does.
there working their hands, like, and now you gotta give it to them and have some empathy too, because
Yeah.
my god, if you have to go out there in Memphis, Tennessee, or one of these other, markets, or, it's crazy hot or freezing
Yep.
outside, you're like, "Dude, let me just buy you whatever the hell you need, because that just sucks." So
Sucks. All right, tell me about a deal that went wrong, and tell me about the stuff you went through to get it fixed.
this is a fun story.
All
So,
right.
I ended up buying a house. We got inspections done and all that stuff. We went to go get it renovated, got the whole thing renovated. And then we went to go get the occupancy permit, and the city said, "Oh, it's been vacant for 3 months. Therefore, you're not grandfathered into being residential, and now you're commercial."
What
And we're like,
the what?
"Oh my god, what do we do to make this back into residential?" Like, and it wasn't on the records in the recorder's office or anything yet. They just
Okay.
said, "It's changed now. You're not it's on us this street." And we're like, "Oh my god, we just made this a house and finished it." And, we're into it for about
Yeah.
$150,000 at that point. It's worth about a couple 100,000. And And we're at like 75% loan to value ratio on this, and our cost of value. And then they said, okay, well, you just take it off a septic and hook into city sewer and we'll give you residential status again. We're like, okay, great. It's not a fun expense, but like, awesome. We go and get the mapping for the city sewer, and it's across a 5-lane street to tap into city sewer, and
No,
down the street 5 houses,
no, no, no,
and they
no.
won't
I
let us.
object. I
Yeah,
object.
yeah, they won't let us shut the road down because it's right next to a military base, which would stop their only entrance to the military base. So we had to burrow underneath a 5-lane street down the street and down 5 houses to attach for like 50 grand, and ended up having a loss of like 30 grand or something on that deal, luckily. But it took like an extra year to get it
No.
done. It took like, we were just
Mm,
like,
mm.
did this just happen? Like, what in the
What the?
world is going on?
Oh my
And so,
that's a new
but
story. You got I'm
yeah,
glad you shared that story. For anybody who's listening to this, that is truly a new story. I've never heard that problem with a property before. It never would occur to me that a vacancy of a certain amount of length would switch a zoning on a property automatically and the city would want to hold me accountable to it. Good
I just
solution.
was shocked.
Good
Yeah.
solution, by the way. Good teaching story. Love the teaching story. All right, now we do all of this so that we're not dying in our jobs like you talked about at the beginning of this, right? You do all of this because it gives us something. And usually it gives us something we call financial freedom. So, what
Yeah.
does financial freedom mean to you? What does that look like? What's your why when you wake up in the morning about why you keep doing this stuff even when it's hard?
So at the end of the day, in the beginning, it was a different why. It was basically so that I didn't have to consistently trade my time for money forever for the rest of my life and die broke when I'm 70 years old, when I'm, retiring at 70, and, being like a lot of the people out there, not having that right accountability for your own situation. And
Mhm.
really, it was freedom. It was mostly about freedom and being able to have that freedom, which in the beginning I was totally wrong. I was like, oh, I'm going to have extra time to go to the gym, and but realizing, no, that's a 14-hour day type situation in the beginning, to grind it out
Yep.
and push for that freedom. And
Yep.
you're going to like take hits and be like, oh my god, this is like, your emotional thing is not like straight up, it's down and up and down and up, and you get punched again and you stand back up. It's like a
Yeah.
battle,
Yeah.
and then now, really, when I go through stuff like I am now, or other times when I, took hits or have to deal with problems that occur, it's I push forward, because if I can't figure out exactly every aspect of this from a financial freedom standpoint, which I've gotten a long way, and I'm working hard now to
Mhm.
solve problems, but I have some really crazy cash flow streams available to me to be completely passive and shut everything off and just literally go live on a mountain somewhere if I want to in 6 months, which is pretty cool. And I see that actually occurring, which is cool. But now it's, I don't want my, if I can't figure out that exact strategy and how to do that and be free, then my kids are never having a chance to be able to see that either. And
Mhm.
I want to be able to teach them these strategies. And, it's really cool. I'm like teaching my son about business now, and, being able to sell things for earning money, and, that kind of stuff. And I have a list that's like all this education for my kids. It's like they got to learn emotional control. They have to learn
Hey,
like
send me
tax
the
and law.
list. You know
Yeah,
I love kid stuff. Send me the
it's so
list.
awesome. Yeah, they're listening. They're watching the Tuttle Twins right now, or reading the books, the Tuttle Twins, which teach about a lot of financial education and doing the right thing and all that kind of stuff. So, but yeah, it's interesting to. So that's my why now, is like, how do you not push yourself if your kids are going to be in that situation when they're, and it's getting harder, right?
Mhm.
It's not getting easier either, from a building wealth standpoint, that's making it more difficult out there. So there's a lot of tech to make you, be able to make money. There's so many opportunities, but your mindset has to be set for it. And you got to be able to train your kids about that mindset too, and looking up and saying, what ways can you do it? Don't just give up. Don't,
Don't just give up.
ever give up. Right. So
Beautifully
yeah.
said. Beautifully said. Thank you, Matthew, so much for being on my show. Matthew Owens, OCG Properties. So appreciate all the things you've done in the years I've known you. Christina Suter, Real Estate Breakthrough. You can find me on christinasuter.com. I am a registered investment advisor, as well as a real estate investment advisor. I am here to help you find your purpose through using the vehicle of real estate to get your financial freedom.